create an infinite number of screens connected to your computer. That one connects to your computer in order to do most of the horsepower in your computer, and then it's just showing you everything, and it's an interface. And but it's pretty awesome. That, I believe, is running now. And yep, CPI report is out. Let me stream on TikTok too. Stuff. Let's refresh the market chameleon, see if I missed anything. I don't think I did. MCMJ. It doesn't even have very much volume. PIK BJDX. Blowjobs DX. Extra energy. XBJDX. That much. All right, got there. Maybe I'll call you guys stinking morons. Jesus. Or we could just go with worthless pieces of shit. Or more COVID resistant if you're stoned now. That's pretty funny. Probably just because the respiratory, they're probably breathing less air, and so there's less virus. You know, I could see how that science experiment would result in less. I'm surrounded by assholes. Nicole says, are you cutting hedges at open now? The 5-minute break rule. So, Nicole, here's the interesting thing. The hedges that I chose were bearish. And it's like nothing can change that. So I didn't choose things that would go down should the report go this way. You know what I'm saying? Or that would go up. I would make money, up if the market tanks. That's not how I did the hedge. I did the hedge by the delta neutral hedging is really cool. And I think you remember it from the days. In that you hedge by simply adding a balanced amount of stocks or macro plays, ETFs, sectors, whatever, that are bearish against your bullish positions. And like theoretically, what's supposed to happen is whenever the market has a bad day, the bullish positions sort of they just but the bearish positions go ugh, right? And that's good because you make money on your bearish positions. And then on a bearish day, I think that was a bearish day. And then on a bullish day, your long positions go yeehaw, while your bearish positions go, oh, yeah, this is maybe an okay day. I think I'll just hold right on here. See what I'm saying? So they work with each other depending on which way the day is going. And actually, you can get, even on the same day, you can get them ripping apart from each other and get like double the gains. So, I'll be watching each position, but on its own merits. And if I lift a position, I'll get out of balance. And so then I have to look for, if I remove a bear, I have to look to remove a bull also. So that's how that works. And but you can handle it the way you want to handle it. And it may go the way you said. It may be that it didn't quite work. The hedges that I picked didn't quite work. And so I may be picking things and cutting them at the open, but it's not because necessarily that's the way it's supposed to work. That could be just coincidental. I might, Nicole, I might, the thing that like a year ago or whenever we did that last time, the, the thing that worked most about that was um, using it in the day trading environment. So I haven't had enough experience with it at this point in the swing trading environment. And but so far so good. I'd like to see as an experiment where could all this end up by like Friday, because I just need a majority. Autobots already. You guys are already getting bad results. Okay, hold on.
I just need a majority number of days. So in other words, if something's in a downtrend, I need like 5-7 days in order for like 4 out of those 7 days to be the downtrend. You need the law of numbers, law of averages to take effect, and you can't get that out of 1, 2, 3 days. So, I might stick to my guns on this for a week. I think the ones that I got expire on the 10th. I mean the 21st. Yes. All right. Well, let's see. We've got 15 minutes until the market opens. Good morning, everybody. Hello, over on TikTok. I got a new link over in my bio, over in the profile. So you guys over on TikTok, if you want to go ahead and click that link, I can actually see if you followed through and clicked the link right now in real time. That'll be kind of cool. I'm going to pull it up right now just so I can see how many of you go and click the link. Yeah, right now, if anybody wants to go and click the link in my bio, the main one there, that'll bring you right into our trading group. And it's just a direct zoom, suck you right in. And I don't know if there's a delay over here, but I'll see those of you who click the link. You have to leave the stream in order to click the link. There we go. There's somebody. Manny 9000, welcome. So cool. Glad to have you. And probably when I look back over in a couple of minutes, I'll see a few more of you in here. Welcome. And yeah, for the rest of you, if you want to check it out, just click the link in my bio that takes you right in. There's Silver Chest, Sema or Kema, welcome. And Creo, welcome Creo. Nice to have you. And I'm sure I'm going to get some blips throughout the broadcast. All right, so CPI has been released, in case you didn't notice. Maybe you're somebody who tunes into the stream for information. Welcome Joaquina, and welcome Chess Script and Dakismo. Welcome. CPI, the inflation rate, the amount of inflation that's been occurring year over year. For 1 year, 1 year ago, how much more does it cost to buy stuff? And so in 1 year, the average, by weighting all the different importances of things, from a gallon of milk to a used car to a house to oil to all these different things, it looks like on a weighted basis that they've got that figured to be about 7%, which is just about in line with expectation. But FYI, 7% inflation is huge. That's 2.5 times normal. So, what does it mean? I'm going to put this into real simple perspective. It's not the exact math, but it's pretty close. What does it mean? It means if you have $100 bill that you got 1 year ago and you had it sitting somewhere in your place, in your house, whatever, under your pillow, under your bed, if you're trying to save cash, it means that's now worth $93. The power of that $100 bill will get you mentally what you used to consider $93 would get you, because of the 7% inflation of prices. So it really essentially now it costs $107 to buy what used to be $100 a year ago. Now you need $107. And that's exactly where investing comes in, because you have to say to yourself, fuck. Now I have, so basically you have the equivalent of $93 now. Well, how do you get your $93 to stay $100, to stay feeling like $100, or, to feel like it's $107 now? You need it to grow. How much? Let's do a little pop quiz. How much do you need it to grow? How much do you need that $100 to grow in 1 year? Let's see what we got here on the pop quiz side of things. Dondrell says 11. This is funny. I just where did that number come from? Maybe he did 107 divided by 93 or something. Somebody says 100. 107. I think we're getting closer. Okay, so I guess, and then, there we go. One person said it. 7%. 7%. That's correct. 7%. So if inflation is 7%, and you don't want to lose your savings, all your, the money that you have over time, then your money needs to be appreciating at 7%. So you need to find investments that will return 7% in 1 year. And that's it. That's the entire game of investing. The reason why people come to investing is so that they don't devalue their money, because their money would sit otherwise and it would devalue. It's literally that. That's all it is. And if all you do in life is earn money and save it and invest it in just basic low risk assets that can just beat inflation, then you're doing the right thing in life. Now, if you're losing money, stop what you're doing, because that's not what investing, that's not what trading, that's not what this is for. If you're losing money, you're going backwards in life, because you don't get those days back in life. You've got to hold on to every dollar you make out of every day, right? So there can be fluctuations in the market, and there can be ways to balance those out, but mostly the hits that you get hit hard with financially in investing are because you risked more than you needed to. All you got to do is beat inflation. That's it. That's all you got to do in life, is beat inflation, and the money will be there, worth what you originally felt it worth on the other end, when you come out of, when you enter retirement or whatever it is. And some people will do better than that for you, but you better make sure that they do. And if it's not somebody else and it's you, great. But if you somehow don't know how to make that money go up in value better than someone else, then why would you give yourself that money to do that with, right? So trading is a dangerous, thing to play with your own money, and everybody's doing it. 90% of new traders lose 90% of their money within the first 90 days. That is a fact. You can go look it up. I'm not even making that up. 90% of new traders lose 90% of their money within the first 90 days. So, you gotta be careful. You can't just go charging in and picking some 18-year-old that made a bunch of money, and they've got a trading group now, and they're gonna lead you in their picks, and they just got a Lambo. That's not what you should be, the kind of risk that you should be putting your money into, because that person probably hasn't even lost all of their money yet. They don't even know their full risks. You know what I mean? They've been trading for a year or 6 months or 2 years. Go with somebody that's been trading for 10 years, 20 years, who's lost it all, who's lost at least $1 million in one trade. So that's where I come in. So join our community, you guys out there. We have a lot of wonderful members. We get to know each other, and many members learn how to start to control their risk in our group, which is something you don't ever really get with other groups. And you need that. You need that, because it's all about preservation of capital. That's the full game. And if we can make money on top with very little risk, yahoo, right? but I'm not into losing money. So, and that's what I can help you with, is making sure that you don't. Teach you what I can. So just click the link in my bio if you want to come join our trading community this morning. And that takes you right in. And I can see that we've got a bunch more of you in there. Flash, welcome. Corey, welcome. Joe Joseph, welcome. MHO 74071, welcome. THX 1178, welcome. Beep, bop, boop. Snake 1246, welcome. Snake just came on over. And yeah, we're going to help you out. So this morning, like I said, CPI numbers were basically in line. They were expecting 7.1% inflation, which is heavy. And instead it was 7%. That's good. Like, do you understand now that, well, there probably is no correlation to or logic to whether or not you would think that maybe lower inflation is better. You might think, there's a reason maybe inflation is good, but inflation is good. It represents the increasing the productivity of mankind. So, but coming out of a recession, it's kind of easy. So anyway, yeah, we're experiencing pretty high inflation coming out of our recession, and but it was in line, 7%, and it was a little bit even slightly under expectations, and so that sent the market in a good direction this morning. The market is popping. SPY popped up a little bit, 7% instead of 7.1%. It's not going to be a huge amount, but it's good. It's positive. It means everybody's not going to get crushed underneath incredible inflation. Like all of a sudden, you're not going to wake up with $50 instead of 100, and you're destitute and you can't buy all the things you need to survive because everything got expensive overnight. And so the market appreciates that. So the market is going to continue on now on its way. And that's what we're seeing. We may have just a nice grind up day all day, green all day. But you know what? The market goes up and down. It's not just necessarily up to, an economic metric, although that does kind of drive the support level, right? So, if you do see the market pull back, don't be, surprised, because the market does go up and down. And but we'll see over the next 2 weeks. I think we'll see the full reaction to this CPI report. The CPI report comes out every month, and in 1 or 2 weeks, we'll be able to see with the candlesticks on the chart. We'll be able to see, what's the full reaction here by everyone. Because not just not just Americans, but world investors, the entire world of investors. How do they feel about that? And they're going to invest in the U.S. market, and we'll see if it goes up or if it goes down or what it does, and it can tell us more about what's to come. We also have interest rate hikes coming this year, which I believe are going to come sooner than expected. Possibly that what they do is they will raise interest rates in order to get everyone saving and clamping down on any overspending, and so that should bring inflation down. So whenever we see some big jolt on the inflation index, CPI, that's when you might expect a follow-up rate hike. And at that point, that can put a mutes on the whole system, put mutes across the board. But in some cases that can be good. So, you just got to know where to look. BJDX, that's a stock that I didn't label up here. BJDX is doing really good, you guys, pre-market. We have 3 minutes to the market opens, and BJDX just looks good to even get in now. And 20, 30 cents of risk stop. Well, I would even put that stop underneath 3 because it's below VWAP. So 20 cents of risk on BJDX. I could be turning into a good day trade at the market open here. I'm going to type that in now. BJDX. All right. It'll be interesting to see how the full, open market feels about these changes, because sometimes you can have stuff going on in pre-market that doesn't match the sentiment of the full market. I'm not necessarily bullish on BJDX, but BJDX looks like a day trade. I'm bullish for 10 minutes. Okay, that's all I can say. So anyway, BJDX just popped to 3.2, and who's getting into it? I trade on Thinkorswim, but I also have Webull, Robinhood, IBKR, Fidelity, TradeStation, and then a bunch of the cryptos, and also just about every brokerage. All right, Preston's into BJDX. When I was talking about it, it was at 3.17, I believe, or 3.14. All right, Cameron got in. How's IMMX today? We're watching it. It's fading. If it can get over 8, then we've got a trade on IMMX. That'd be great. Another one that looks really good, guys, is EVFM. I like the signature. I like what I'm seeing. If it can break 5.3, 53 cents, I'd say that's a go for about stop at 45, 8 cents of risk. So that's a penny stock. 8 cents of risk. I like the chart on that one, though. And DWAC is still going. Here we go. We got 30 seconds to the market open. All right, here we go. All right, let's check out BJDX. Tesla, if it pops the high of 1084, you can get in for $7 of risk. Tesla, if it pops the upside, $7 of risk. But realize that's right at the market open. So things, sentiment can change in the next 5 minutes. 5 minutes, first 3 to 5 minutes of the market are a really kind of a shakedown, a shakeout, trying to figure out direction. But if if you're a fast trader, you know what to do. You can turn on a dime. Then you can take advantage of that. Potentially, it looks like tech Apple is dropping a little bit. Let me go over and look at tech. Everything's a little bit red at the open. No, the Dow actually holding strong, and industrials pushing up. XLI industrials pushing up very strong. XLF pushing up. XLE, XLB. So all of the industrials, all the inflationary stocks, ironically, going up. Okay, there goes the Qs. The Qs on a hole now, starting to work their way up. Yeah, Ford looks like it's going to break 25 today easily with an average true range of $1. It may even hit 26. Okay, BJDX is now dropping to 3.1, so it might not have the energy for it. You guys over on TikTok, we're going to cut off the stream in just a minute here. Make sure you click the link in my bio to come join our trading community right now, right before we have to cut that off. Everybody in the Zoom and in our trading group, way to go. Let's see what else we can get here this morning. So you guys over on TikTok, just go on over to my bio, just exit the live, go on over to my bio and click the link, and I'll see you over here. Welcome, Hyper VFX, Derek Guy, W. Lager, Alorn, Enick, MKV95, Mitchell, Mr. Fish 007, Scott Tata, Fire Breathing Rubber Ducky, Yeah, we really welcome you. That's pretty awesome. We love fire-breathing rubber duckies. Rasfine, welcome. Viziatev, welcome. Mr. Junior, welcome. All right, click the link in my bio, you guys, and I'll see you in just a minute in our Discord, in our trading community. All right. So SPY going green now. SPY going green, so are the Qs, and the Dow having no trouble doing so. This is good stuff. Oh, well, I'm certainly going to take off my SPY put now. So just FYI, I think Nicole, if you're wondering, certainly going to take off my SPY put. Don't need that anymore because that was kind of like for a disaster case. EVFM, yeah, I like that. Yeah, if it can break 53 cents, you can get in for stop at 45 cents, so 8 cents of risk. Yeah, keep an eye on that. Well, BJDX is still holding. Some of you might be in it, so that's fine. You didn't get stopped out, still holding. A little bit of potentially a fail retest, possibly going on right now with BJDX. Probably. If something's not going, it's not going. The market seems to be really trying to suss out, if I go down, what do you think? If I go up, what do you think? And then getting hammered on both sides. It's quite mixed. It's a very mixed day. I think because we went with expectations. So now let's see what happens. Who dwack? You dwack. They're dwack. Oh, whoa, dwack? Dwack just fell just like $2, but I mean, yesterday it went up absurdly from 57, so you have to expect some retracement. I don't think that's a big surprise. Yeah, market pretty much sideways at the moment. Yeah, there goes Dwack. Oh, maybe that's what it was. I wonder if my thing is delayed. What were you talking about, Steven? Is that what you were climbing back up? Yeah, I didn't see that. Yeah, whoa, Dwack breaking out. You guys get on Dwack. Absolutely. I can't even get to it in time to figure out the risk, but I'll tell you in a second. Yeah, there goes Dwack. Maybe to 62, $5 a risk. That would assume that it would go to 77 or 80 today. No, not that one. EVFM, it's still a good chart. You might be able to get in kind of like at this basing level of high 40s. Penny stock, though, just remember that means that anyone with, $5 million can just pull the rug on you at any moment. It would take $1 million to manipulate the stock. It's really not that big of a deal to fuck you in the ass. So be careful with penny stocks for that reason, guys. Go with stocks that can't be manipulated as much. That requires some experience finding the sweet spot on that. Hello, middle of the map, and Manuel. Good morning. Strong zombie. What a name. I know. It's very interesting. It's, rates didn't give anyone any huge directional bias. And so things are still kind of the same. So it's like, what are they? Is the market shit? Is the market good? It's nobody wants to go for it, Nobody wants to go for it. I'm curious if we drew out of gold. No, gold's going up. As a matter of fact, Bitcoin was futures were reacting, and Ethereum futures were reacting strong, but now they've started to pull back. They're like, this ain't looking as confident as we thought. SPY now breaking low pivots. So SPY technically in a short-term downtrend now. And it looks like the Q's leading that way. They are strongly in a downtrend. They're breaking pivot. But over on the industrials, the Dow, you have only a failed retest. You still have a higher low. And so industrials definitely relative strength-wise outperforming the rest of the market. That's exactly what I repositioned my portfolios for yesterday, was for defensives. That's basically what these are. Industrials, financials, energy, base materials, gold, commodities. What am I missing? There's one more. Defensive staples, consumer staples. So, that's where I sold out of everything yesterday, remixed and got into all those. But if I had anything that was in any of those sectors, I kept them. and then that's it. Your portfolio doesn't perform like 30% annually now. But the thing is, maybe it should beat inflation, or it should just like hang out, or if the market gets beat up, it gets beat up the least. And that's the idea. That's the idea behind going defensive with your portfolio. And you can do that at any moment. You don't lose money by going defensive. You can have a defensive portfolio forever. You're not going to beat, a well-timed, well-structured growth portfolio. But in the short term, if you need to be defensive, you will actually, but in the long run, you'll still beat inflation. So it's not a bad thing. Not a bad thing at all to go defensive. To go defensive doesn't mean you won't be making money. Or if anything, it means you're going to be losing less than everybody else. You're going to, be safer than everybody else. So BJDX crapped out. Is it anybody? You guys didn't say anything. BJDX trade stopped out at 3. I don't want you guys to be in that longer than you need to be, and it's going up to 2.96 right now. So yeah, Preston dumped it. Good job. You need to be 4 to 5 times more defensive than you are offensive with your trading. Let your winners run. PIK, totally popping. In fact, it might be halted. I'm not sure, but probably PIK breaking out of the pre-market highs of 8.6. I believe. Maybe my chart's not right. Oh, never mind. PIK, no. Never mind. No, it's not. Yeah, my chart is just showing me like the maximal range or something, and it looked like a blip. No. What it was is it's showing that it's time to go short. Exactly, Preston. Exactly.
IMMX.
If the VIX can settle down today, if it can be in a downtrend by the last 2 hours of the day, FYI, I'll be doing some alerts in the trading group. I'll be sending out alerts in the trading group for swing trades at the end of the day. See if we can find some good stuff. All right. And of course, Disca is having a good moment today, but I cut it yesterday. Let's take a look at that. Well, it's no big deal. It was down. I wanted to get out of, the high beta is kind of like what it is. High beta. Who knows what beta is in the market on a stock or an ETF? What is beta? Without looking it up. A great fish, an awesome pet. Who knows what beta is? Not this guy. Little bitch. That's great. It's like, well, it's not Trump, I can tell you that. No, beta in stock market, it refers to how much a stock moves compared to the average stock of the S&P 500. So like Tesla has a huge beta. It's like, I don't know, 5 or 3 probably. Tesla moves, relatively, the percent changes it makes per day are just ridiculous, But then like Bank of America, kind of like, it just barely moves. Like, or Ford, if you're used to looking at Ford, just barely moves. So it might have like a 0.25 beta. So a 1 beta, 1-to-1 ratio. A 1 beta is like, it moves fluidly and in proportion with the market. Bank of America, if the market's moving and all the stocks are moving, Bank of America moves like a quarter as much, so the beta's lower. The amount of move per day. That's really what it is. And anyway, you can use that to kind of figure out whether or not, think of it this way. If I told you that a particular stock behaves in such a way that it will go up or down 5 points any day, right? And then I said, okay, in 5 days, therefore, what is the probability of it being, way up, way down, and at the same price, right? Well, because it moves 5 points every day, there does run the possibility that it could go 5, 5, 5, 5, 5, right? And be up 25. So the spread, the spectrum, the implied volatility of that is somewhat affected by the beta, will be really wide, right? But if I said the same thing to you about like Bank of America, 0.25 beta, it'd be a much smaller range. And so would you rather be in something during an uncertain moment in the market, like this morning, CPI index? Would you rather be in high beta stocks or low beta stocks during that moment in order to preserve your capital? Right? Doesn't that just make logical sense? Because you don't want to get your ass kicked by a potential rare move, right? And so that's why you clamp it down to low volatility, low beta. FAF. Okay, let me take a look. FAF. Is that related to DWAC? I think. Anybody? No? I kind of remember some connection between FAF and DWAC. Maybe I'm brain farting. Yeah, it is halted. It does not tell me what it's going to come out of the halt at, but it does tell me that it's going to come out of the halt in about 3 minutes. So that was at 5-ish. And now it's almost at 8. Market coming back up again, but I mean, this is just sideways motion. Let's see if it can break the high. That would be good. Also, we can compare VIX to see how people are feeling about this market with the SPY side by side. If you can see that on my screen. And if there's any difference in the inferred bullish or bearish information between 2 points, then that's divergence. It doesn't. You can kind of measure it by the size of difference, but really what you need is total 180-degree differing viewpoints to call divergence. Okay, so if you're watching VIX on the right part of my screen and SPY, negative VIX, and the right side of my screen of SPY right there, I have them side by side so we can really take a look at them and see if we're getting in any divergence. And actually we are. We're getting some positive divergence. Can you see right here that the VIX went up between those 2 points, but over here, SPY is flat, if not down, between those 2 points? So that's a little bit of bullish divergence. So that's how you can read the expectation of the market using VIX divergence. And now SPY has caught up. It was late, but now SPY has caught up, and now they're in coherence. They're correlated. They're not divergence. They're not diverged. See, they're the same. But right now, SPY is at the level of that previous red candle. And so if you were trying to look for divergence, you can start measuring that. And it's the same right now. So no change in sentiment yet. I'd be very curious to see there. VIX is leading the way now. So the market looks like it's probably going to break out then, because we're getting a slight bullish divergence, enough to break the market top. It doesn't necessarily mean we're bullish because it's only slight. It's enough for it to pop the lid off of a high. That's about it. All right, we're going to come out of the halt in 10 seconds on FATH. FATH. Keep your eye on FATH. Pull it up. Get ready. Do whatever you have to do as a day trader. Here we go. And where is it? Okay, it didn't come out of the halt when it was supposed to. So there it is. It came out of the halt. Huge pullback to 7.5, but no, now it's pushing. It's still demand there. Looking kind of good on level 2 as far as demand goes, but be careful. I would put the stop at the bottom there since it's so nicely formed. 6.6. Wherever you get in, calculate your risk down to 6.6. So right now that's about 70 cents of risk, 75 cents of risk. Okay, we do have ever so slightly a bullish divergence on SPY. That's good. Does anyone know what the ticker for options volatility on the Qs is? There must be one. I think there is one. Let me see. QQQ VIX. Is there such a thing? What is the volatility index for QQQ? No. VXN is a key measure of market expectations of near-term volatility conveyed by the index option prices. VXN looks like VXN. So I'm going to put that right next to the Qs over here. Negative VXN, and we'll be able to read the Qs implied volatility also. Okay, VIX is definitely showing bullish divergence at the moment. NVCR. All right, so FAF, forget it. Yeah. Well, thank you for trying, you guys. Bringing FAF. I don't think anything's going to continue over there. This is why we go with a good pre-market sentiment, nice catalyst, big news, huge volume, a lot of information before we get into the trade. There's nothing like getting into something blind. right? We don't want that. All right, cool. Yeah, that's the implied volatility based on the options pricings. So the exact volatility of the Qs. Love it. VXN. So now I'm going to look for the Dow VIX. And then we'll have all of those. I mean, talk about information. VXD. Estimate of the. Okay, wait a minute. Why is it an estimate? Hold on. The DJIA Volatility Index is a VIX style estimate of the expected 30-day volatility of industrial stock index returns. Like VIX, VXD is calculated by interpolating between two weighted sums of option mid-quote values. Okay, good. In this case, options on the DJX. Okay. The two sums essentially represent the expected variance of DJI index returns up to two option expiration dates that bracket a 30-day period of time. Is obtained by root and expressing the result in percentage points. All right. Well, I'll pull that one up as well. VXD. SPY should break odd. Look at VIX. Look at the divergence on VIX. VIX broke out. You know, SPY didn't yet. It's going to. You know, everyone's betting on it. They're seeing it ahead of time. VIX is telling you that. Well, it's still somewhat of a lackluster trading morning, though. We've been open for 30 minutes. There she blows. It's market's dick. Captain Ahab. The market is rising. Steven, you're out with 2R. All right, later. Time to go make some soap. Yeah, Steven, by the way, I got your package here. Yeah. It says Evan Evans, the GOAT Trading Group. Love it. And I'll open it now. Why not? Since we're not doing much. Let's see what Steven sent over. He's like, oh, buddy, you probably shouldn't open that one in front of everyone. There is a silicon. Anyway, let's see what the fuck is in here, people. Oh, it smells very good. A lot of like rosemary sage, I think, coming out of here. All right, I like it. Is this a new one? It's the black one. Okay, but there's definitely a new scent. Maybe it's heavier. Heavier on the what do they call that? The musk? I forget what they call that. It's the voodoo. All right, cool. This is the voodoo, people. Smells awesome. Don't forget to man up your game with slappies. Buy from each other. Oh, we got quite a few little things in here. Thank you very much, Stephen. This here is the solid cologne. Put that on. Is this how you do that, Stephen? You just get a little and zoop zoop. All right. That's what I figured. There's quite a few little treats in here. Oh, wow. Man scrub. Okay, so this is like a granulated oatmeal type of thing or something? Wow, that smells real musty, real musky. I like that, you know. It's going to be nice. I think chicks dig it. And my house is full of chicks, so because it's my wife and like 4 girls. They're going to be like, "Wow, Daddy, you smell good." That sounds like a good commercial, huh? Well, maybe not. Fucking liberals. Anyway, they take the fun out of everything by taking everything literally. Cool. I like it. that one. There's the link there. Yep, Stephen. Everybody, you know, if you want to grab something, if you're gonna get a scented soap or a cologne soap or candles, scented candles, but for men, for your office, for your home, for your bathroom, to get the chicks to dig you, don't do it at Walmart. We have a guy here, you know, right in the group who could really use your support. I mean, maybe he doesn't need your support, but I mean, you know, fuck the corporations, right? So you know, buy from Steven. You know, always buy from each other. If any of you, you know, have small businesses and you think that anyone in the group would be interested in your service, please, like, just post it in the group. You have my permission, and feel free to private message me and send me samples, and I'm happy to, you know, check them out and show people on the show. But yeah, that smells great, and I'm getting low, so that's perfect. But you know, buy from each other, support each other. That's, you know, that's the way we keep it tight. We keep it in the group. You know, one of the worst things about California is the taxes. And if you live in a particular neighborhood, let's say, what's the city north of San Francisco there? Starts with R. Why can't I think of that? Or just fucking like, no, it's right across the bay. And now it's killing me. I could pick a different example, but now it's killing me so much that I got to go find out again. San Rafael. I think that's called San Rafael. Whatever. It's just an example. Let's say you live in San Rafael, which is a beautiful city. Almost reminds me of Connecticut or something. Beautiful city. You pay your state taxes, right? And what do they do with those state taxes? You know, a lot of it goes to, you know, every city in the US, everywhere. It goes to San Diego, it goes to Temecula, it goes to, you know, can't think of enough cities. Yosemite, which is nice, that's good, but you know, it's enriching, not you. It helps you zip, you know, and if the people in Temecula want a better life, they should move, not look for a handout from you up in San Rafael. You understand? It's natural. It's much more natural. Like the way California is being treated economically by taxation, it will erode even physically areas in California that should not be naturally eroded. It's not economic. It's not natural to have socialist, you know, support programs like that. So they're taxing it hugely, and then they spread it out equally across the entire state of California. Everybody gets a little bit, but that's not really. It's almost like, you know, called tough love. You know, you got to really let somebody fail so that the right result can happen. And that's what you know, free market does. That's what economic principles do. Political principles just destroy everything. Anything that's not natural, which is typically the left, without getting too political and you guys attacking me because you don't know jack shit, it's typically the left. Okay, I studied this at Yale, so if you know more than me, fucking go for it. But please don't get pissed off at me for saying that it's mostly the left, because it is the left who are the socialists and adhere to, you know, socialism and groupism, you know, and it's the right that are the individualists. Anyway, that's what socialism is. It's, you know, let's all be fair to each other. Oh, you have some money over in San Rafael? Let's give it to everybody and spread it out evenly. Well, it's not natural. And if you just think about it, it rewards people unjustly. So a place like Temecula, or that shouldn't, it's just desert, or what's another one, Victorville or something. It's just desert and not a place that you want to be. Later, Nicole, is going to get the support so that it doesn't die like it should naturally. It should naturally dwindle and die, and it become a ghost town, whatever, and then turn back to sand and sand dunes in 200 years, whatever it was. It's not supposed to work like that, and so you're actually harming nature by doing that. And of course, what do we have there? But so anyway, the point is, it's exactly the same with, like, for example, here in Texas, we have no state tax. And what does that do? It keeps people from building cities in the middle of fucking nowhere, because they're not going to get the subsistence, because we don't have that money for you, because we didn't tax the people anything. 0% state tax. And so, but instead we have high property tax. We have high local county property tax. But think about that. What does that do? So let's say, you're making money and you're giving 3% or 5% per year of your residential roots financially to your county. What's that going to do? It's going to help your local roads that you can see. It's going to help your local schools that your kids go to. All your money, all your taxed money is going to go right out there to working for you. And so that's why I say give to the people in this group, because we are our community. You want to see each other grow. We're the good ones. You guys are paying to be members here. And it's because you're the smart ones. You got over the hump of whatever it was, and you are all identical in a way. You're like-minded, and you should support each other, and not give that money to Walmart wherever you can. And if you can buy locally, do it. It's, even if it's a little bit more, it's because it's going to trickle in and over and into your locale. Unless you live in California, where they fuck you at every angle they can. I'm sorry, but you might be a little bit screwed there. But depending on where you live, try to give your money for the same product or a similar product to somebody local. But the weather is amazing. Yeah, well, it won't be for too long, because the economic principles being employed in California will destroy it naturally. Not just politically or urban, but it will even erode the natural scape of the land. Not to mention, to say nothing of the people. People are nature too. So natural law is being violated in those situations, and it can't be made up for. It's imbalance. It's doesn't compute. It's not economic. It's not natural. They call it natural law. And the same natural law that started at the beginning of the universe, the Big Bang, those principles, those are the same economic principles that are part of natural law and that are nature, and that have formed this earth, and that have created evolution, and that evolve things in a good direction. And you've seen the results of socialism. We've seen it. We already know where that goes. It's not natural. It's not. I mean, it's bizarre. So, I think consciousness did that. Consciousness. It's our own fault. Consciousness has created it. We see it in hive species, from bees and African elephants, gorillas, dolphins. Hive species. We are a hive species. We're finding out we are a hive species, and we're conscious, and we are kind of a problem in the universe. And to solve that problem, all we got to do is be a little bit more natural and a little less unnatural. So anyway, on that note, I'm going to bow out of the market right now. It's definitely grinding up, but sideways-ish. And I'll be back at the close of the day to alert some swing trades if the VIX continues to go in that direction. Later, Stephen. And don't forget to buy from Slappy. Slappies. Man up your game. Man up your man game. Is Slappies natural? I think so. Because, see, Slappy sent me, Steven sent me these things without me necessarily paying for them. They're promotional product, I don't have to do anything. I could throw it away if I don't like it. The reason I show you is because I do like the product. But you couldn't make a move like that, unless that was natural. That's economic. You see, it computes. How can somebody blow money like that unless it's economic? So that's natural. I think you'd probably see a Democrat would probably charge you for the same thing. All right, everybody, goodbye.